Hi, good afternoon. Good morning to those of you on the West Coast. The next company to present at Sidonian Company's virtual conference will be Electromed. With us, we have the CEO, Jim Cuniff, the CFO, Brad Nagel. As always, this will be a 30-minute presentation. There should be some time at the end for Q&A, so if you do have a question, you can type that into the button at the bottom of the screen. With that out of the way, it's all yours, Jim.
Hey, thanks so much, Jim, for the introduction, and thank you, everybody, for participating in this presentation. We're excited to share with you the Electromed story. And with that, let's get started. So this is the normal disclosures, which I'm not going to read through. But I did want to share with you the Electromed story and a little bit about who we are. We are a medical device company. We're really focused on airway management in the respiratory care space. And I think many of you may find this kind of shocking, but we've actually been doing this for over 30 years. We're based in New Prague, Minnesota, which is about an hour southwest of the Twin Cities. We generate about $60 million in revenue, 210 market cap as of today. All of our manufacturing is done in Minnesota also, so we're a US-based manufacturer. And quite candidly, most of our componentry that we use within the assembly of our product is sourced within about a 100-mile radius of our manufacturing facility. So we don't have great exposure to tariffs, and we're in a really good spot as a company. Also on the financial side of the business, we've got a great story to tell. We're growing, we're profitable, we're in a large market, which I'm going to talk more about in a minute, that's expanding. The technology that we manufacture, it's called high-frequency chest wall oscillation. I'll be referring to that as HFCWO throughout the presentation. And I'll also share with you what that mechanism of action is. But we've got a really attractive direct-to-patient model, again, which I'll talk more about in detail, and a great financial profile. We're growing, we're profitable, we're generating cash, and we have no debt. The primary disease state that we treat is called bronchiectasis, which is a bit of a mouthful. But it's important to note that it's an irreversible chronic lung condition that's really characterized by abnormal widening of one or more of your airways. And essentially what ends up happening is that mucus builds up within the airways, which really prevents the patient from, or the individual from having a great quality of life because they're compromised in their breathing. This is a disease which is misdiagnosed, it's underdiagnosed, and as a consequence, our technology, HFCWO, is underprescribed. The market for this is large, it's growing, it's underpenetrated. I know there's a lot on this slide, but I'll try to unpack this iceberg for you. And let's just start at the top. So today there's about 824,000 patients in the United States that have been diagnosed with bronchiectasis. Of that, about 127,000 are on our technology or one of our competitors' technologies. And if you back that out of the 824, of that remaining 740,000 patients, there's about 230,000 of them that are actually being seen by a pulmonologist. As a direct-to-patient model, our sales reps call on pulmonologists, and if all 230,000 of those patients were put on HFCWO therapy, the total addressable revenue is $2.3 billion. So really great market opportunity for us. And as you can see also, the prevalence of diagnosis is growing about 12% annually. So how's bronchiectasis treated? We have introduced a new campaign in the last several months, and it's called Triple Down on Bronchiectasis. And this is really our thrust at not only educating providers, which are the prescribers of our technology, but also patients on what are their treatment options for this disease state. Today, if you've got bronchiectasis, as I mentioned before, you have mucus that's building up in your airways, which is really preventing you from getting a deep breath. And so it all starts with clearing the airways. So when you clear the airways with our technology, many of those patients also have an infection, which is treated with antibiotics. And then in the future, there's going to be drugs that are coming out to address the inflammation. In the three elements that you see here on the treat infection, reduce inflammation, clear the airway, that's really the triple down elements that a patient needs to go through to improve their quality of life. This gives you an idea on this slide as to really our mechanism of action. So as you can see on the left, there's a vest that's attached to a hose that's attached to a generator. And that vest is basically gently squeezes and releases the patient. And that mechanism of action, that oscillation, is what forces the mucus into the major airways. Then the patient can either cough that up or swallow their mucus. But again, then they can take a deep breath and they can have an improved quality of life. Since this is a chronic, irreversible condition, the patient is going to be doing this therapy usually 2 times per day. The therapy sessions are usually 30 minutes at a time. And again, since it's chronic, irreversible, they're going to be doing this 7 days a week. We're really excited because a little over 2 years ago, we came out with the newest HFCWO device, SmartVest Clearway. And we're really excited about this product because it really is best in class. We've got the lightest weight vest on the market. We have Velcro enclosures to help adhere that to the patient. That's important because many of these patients are elderly, and having to manage clips is difficult if you have arthritis. Also, having a heavyweight vest is difficult because it puts strain on the body. And we're the only single hose device on the marketplace. So the ergonomics are great. And as you can see, we're really proud of the industrial design. We have no on-off buttons. Everything's utilized through a touch screen, and the compliance rates are really terrific on this. In addition to that, we do have really robust payer coverage, both with CMS as well as with private payers. And we have over 270 million contracted lives that can take advantage of this technology. The other thing that we do, in addition to manufacturing a product, delivering it to the patient, doing the education and the in-servicing on the product, is we actually we look at their progress. How are they actually progressing and using this technology? And so upon delivery of the product and after training, we do an initial assessment of that patient's quality of life. We come back and do a second assessment after 5 days, and then we follow up 30 days later to do a subsequent assessment. And this is really valuable because what we want to be able to provide to the clinician is how is their patient actually progressing on this device. And this is just a great way to show that patient progression for the prescribing physician. The evidence is clear. Not only do our patients love using this product, as you can see on the left here, 95% would recommend SmartVest to others, but also our clinical evidence is very robust. And at a time when most health systems would like their patients to be treated at the home and out of the hospital, this product, when used properly and consistently, has shown a 57% reduction in antibiotic use, which is great, a 59% decrease in hospitalizations, and 75% fewer ED visits. All important attributes, especially if the patient was initially admitted into a hospital, the last thing that the hospital wants is for that patient to be readmitted, which is a never event for the health system. I mentioned before that we have a direct-to-patient model. Let me depict what that really means. In the home space, most manufacturers like us, they make the product, but then they distribute that product through a durable medical equipment distributor, who then is the one who's responsible for generating demand with the patient. They're the ones who have the payer contracts. They're the ones who deliver the product to the patient and do the in-servicing. And as a consequence, they need to share the manufacturer, their margin with that DME. In our model, even though we do go through a select group of DMEs, most of our revenue is generated by going direct to the patient. So we're not only the manufacturer, but we also have payer contracts. Our sales teams call directly on the providers to get prescriptions for our product. We deliver our product to the patient home, and then we help the patient with their insurance needs as well. Where's our revenue coming from? Most of it is in the home setting. We have a nascent international and hospital business. Our hospital business actually is thriving, and we feel like that's white space for us. So we're continuing to lean into that. We also feel like that's an avenue to the home. So we feel like that's a nice referral source for us. As you can see also from a reimbursement standpoint, about half of our reimbursement comes from Medicare. And then also, as I've been talking about in this presentation, though we do cover other disease states, the primary one that we focus on are those patients who have bronchiectasis. So how are we going to grow? Well, we've had a great strategy of shrinking territories and continuing to expand our feet on the street. That's been a winning strategy for us, and we're going to continue doing that. We also have a very robust direct-to-consumer and physician marketing. And why that's important is because these patients, again, have a chronic irreversible condition, and they're looking for solutions. And because this is a underdiagnosed condition, we also want to make sure that the clinicians have all the information that they need on this disease state to better identify patients who might have bronchiectasis. So our direct consumer model is one in which we do outreach to physicians as well as patients. And this has been a terrific referral source for us, because we have patients who can then interact with our respiratory therapists who are on staff to help direct those patients to pulmonologists that they can see to find out more about our product and if it's appropriate to treat their condition. Because also there's not a great deal of awareness, we've also invested in a lot of market development, and that's been a great tailwind for us. The good news, as I mentioned before, is there's also drugs that are entering the space. And so pharma too has been doing a terrific job in further educating providers and patients on bronchiectasis. And I think a consequence of that is that all boats are going to rise in this market segment. We also, because we're not only a manufacturer, but a DME, we have what's called Smart Advantage. And this is to help not only the clinics that we serve, but also the patients in helping make sure that they have insurance coverage for our product. And then also, this has really been a really neat leverage point for us. The norm within our market, when we get a prescription, it's sent through a fax, believe it or not. But we have introduced an e-prescribe solution, where we can basically get all of the patient's notes. We can identify that they have all the criteria for reimbursement. And it's just been not only a great benefit to the clinics that we serve and time savings, but also it's been a great efficiency benefit for us. And a consequence of that is once we have all the right documentation and we know we're going to get payer coverage, we can get this therapy to the patients sooner rather than later. Our long-term objective, we are a publicly traded company. We don't give guidance, but we've been successful, and we continue to believe that we can generate double-digit top-line growth. In the last 18 to 24 months, we've done also a really good job of not only growing the top line, but driving efficiencies internally, which has helped us expand our operating margin. And we expect that double whammy of revenue growth coupled with better operating leverage to continue in the near term. So why invest in us? Well, as I mentioned before, we have a large expanding disease state that we are covering. We've got clinically proven technology that's best in class, great payer coverage that's only getting better. We've added resources into our reimbursement team to engage with our private payers in particular, to not only expand that pool of payers, but also to look at getting better reimbursement. We've got terrific top line growth, and we're profitable, we're generating cash, and we have no debt. The other thing I wanted to share with everybody is that management's incentives are aligned with our investors. My incentive compensation, Brad's incentive compensation, management team's compensation is not a combination of driving financial results and subjective KPIs. Our incentives are based on driving investor value through revenue growth and earnings growth. And if we're not successful in doing that, we don't achieve our incentive compensation goals. And we feel like that's aligned with our investors. Likewise, if we do well on both of those metrics, hopefully we'll be generating better shareholder value, which we will then benefit from as well. Looks like this is such a great slide, we're staying on it.
Let's try it.
Yeah, we're trying to advance the slide here. I guess the last thing I would share with you as we're waiting is the fact that, and here we are, is we're an attractive valuation. So when you take a look at Electromed versus the Russell Medical Index, as you can see, whether it's sales growth, margin, both gross profit and operating margin, we're head and shoulders above what the averages are in the Russell Medical Technology Index. And so we feel like we've got a very good investment story to tell. So Jim, with that, that's the end of my presentation, and we'd love to open it up for some questions.
Great. Start off with some from me. Nice presentation. But
Thank you.
to me, I think the clearest way to grow is to increase awareness. It seems I go back to that iceberg slide you had at the beginning, where there's seems to be a lot of potential patients, but not very many actually getting treated. So what is the best way to increase awareness? Is it talking to doctors, talking to patients? What do you think the best way to do that is?
Well, Jim, I think it's a combination of both those things. As I mentioned, part of our D2C strategy is to educating both providers and patients. Obviously, our sales reps, as a single product company, are engaging with pulmonologists on a daily basis to help them identify bronchiectasis patients. We feel like that's still a winning strategy for us because this is still very much a clinical sale. And so having experts in the field talking to clinicians helps. The other thing that we're excited about is that we're anticipating that the Chest Society sometime this year is going to be introducing treatment guidelines for bronchiectasis patients. And believe it or not, in the United States, there has never been United States-based treatment protocols for treating bronchiectasis. And we believe, although we don't have overwhelming insights into this, we've been told that part of that paradigm is going to be having airway clearance as part of that treatment protocol. So those are just a combination of things that we see are really important.
And do you have physicians talking to other physicians or presenting at conferences, letting them know about treatments, or
we
is
do.
that part of the strategy?
Yeah, we participate in all the respiratory care conferences, both as a supplier as well as on the podium. So, we do have a clinical team, and they present on bronchiectasis and airway clearance. And I think that's another mechanism by which we get the word out. The other thing that we've done really successfully in the past 12 months is we've introduced CEU courses, continuing education courses for physicians. And part of that is focused on airway clearance. And, we feel like that's another way just to spawn that area of knowledge for them. Because many times what's happening is these physicians are seeing patients and they're identifying them with bronchiectasis, but there's also many of these have overlap with COPD, and they have overlap with bronchiectasis. And so just illuminating that in their eyes, I think, is important, because if they have bronchiectasis, you certainly want to get them on airway clearance. That's part of what's going to help them breathe easier and have a better quality of life.
All right, and then another way to grow, it may not be as easy, is to gain share in the marketplace. And I know you came out with SmartVest 2 years ago. How is that doing? Do you think you picked up some share?
Oh, absolutely. Unequivocally. Yeah, there's 4 players that are in this market. 2 of us are publicly traded companies, so you can see what our financials are. And between the 2 of us that you see, where you can see the granular financial data, we've been growing at about 10 times their rate. So we feel like we're at 5 to 10 times their rate on the top line. And you don't do that without taking share. The other thing that we do is we do pull reimbursement data. Unfortunately, the data that we have is a bit stale, mainly because of the Change Healthcare data breach that happened last year. So we're still looking at mining that data, but we do believe that the growth rates that we've had in the last 2 years, we are gaining share. We also have a couple of competitors that are a bit distracted. 2 of our primary vest competitors where they have a vest and a hose that's attached to a generator. They have a broader bag than we do, so their reps are focused on other products within their portfolio. We have another competitor that unfortunately has had some quality issues and are under a FDA consent decree. And so, they've got other distractions of their own, and they've been letting off staff as well. And we think that that's actually been an opening for us, predominantly within the hospital market.
And should we expect another generation product over the next few years? Is that something that you you started
You know,
working
the
on?
life, we do. I don't anticipate it's gonna be in the next couple of years though, Jim. The life cycle on this technology is a lot longer than a lot of other med technologies. It's usually, 5 to 7 years versus, every 2 to 3 years. And we feel like that's right. We've introduced a new generator. And when you think about it, unlike a lot of other medical devices where they're typically used within a hospital, ours are used in a patient's home. And in addition to the individual getting the care, they may have other family members that are using that product. So our product has to be really robust. And in addition to that, we have a lifetime warranty on our product. And so, when a patient gets a SmartVest, we guarantee that for life. And that includes the hose and it includes the vest that comes with the generator. So, we don't have to have a new device every 2 to 3 years.
All right, and then I guess the third way to grow, which is probably even harder, is to add products to the portfolio. And as we talked about a little while ago, you have pretty impressive infrastructure with regards to being able to obtain reimbursement, to code properly, and that's a pretty valuable asset. Are you considering that as an option on the, are there other therapies that you think you could sell and put through your reimbursement, your revenue cycle management process?
Well, first off, it's a great insight. It's a great question, and you're preaching to the choir here because we're always looking at what else could we add to our sales reps bag. I mean, we've got three valuable assets. We've got a best-in-class product. We've got what we believe is a best-in-class sales team that only has one product. So if we could put another product within that channel, that would be a victory for us, as long as it's not a distraction to our high-value, high-margin product. But we also, to your point, we've got a great reimbursement team, and we don't take for granted the payer contracts we have, the efficiencies we've gained with that team. And certainly, Jim, I mean, I'm always on the lookout if there's a technology that's out there where, it might not be in the pulmonary space, but it might be in an adjacency. But it's a best-in-class technology, and one of the missing components is having the reimbursement team. That could dovetail into what we're doing. We're certainly always looking at those types of opportunities.
And right now the balance sheet's in very good shape. I mean, would you consider leveraging it a little bit in order to get into a new business?
We would right now, though, to the question you asked before, when you take a look at that iceberg that I shared with you, we just feel like there's so much runway in the market that we're serving right now, and especially as we continue to invest in awareness campaigns, expand our sales team. We've demonstrated we have a best-in-class technology. We still feel like we've got runway to grow and great tailwinds. But certainly, back to your previous question, if there's, we are generating cash. We've been providing investor value by doing share buybacks. We did one in September. We just introduced another one a couple of weeks ago for $5 million worth of share repurchases. So if we can't find the right M&A opportunity, we'll certainly, look at other means in which we can provide value to our investors. But yes, I mean, we would take on debt if the appropriate asset was out there. But in the meantime, we want to make sure that we're being good stewards of the cash that we have and investing back in the business, and then providing value to our investors where it makes sense.
Right. And then a couple questions from the audience. Are there any headwinds and tailwinds, because of the new administration with regard to the VA or, tariffs, that type?
I think we're a bit, you never know. I mean, the landscape has changed so much in the last 2 months. I'd hate to look into the crystal ball. That would be foggy in 2 minutes. But as I mentioned at the onset of our presentation, the good news is we have very little OUS exposure on the revenue side. So tariffs won't impact us on that side. Most of our raw materials that we source are sourced domestically, and we do all of our manufacturing here in Minnesota. So we're pretty sheltered from tariffs on that side as well. And most of our revenue is here in the United States, so we're in good shape there. Relative to the VA, quite candidly, our hospital business, and that's really where we would get referrals for VA, veteran patients, it's just such a small portion of our total revenue that we don't feel like that's a big impact, nor if there's any changes that happen with bundled payments to hospitals, that's going to be a big negative for us. In fact, what it could be is a big positive, because as I mentioned before, if you've got a respiratory patient that you've admitted and then discharged, and they have bronchiectasis and they were on a HFCWO device while they were in the hospital, if they could get on our device when they're at the home, which prevents them from getting readmitted into the hospital or going to the emergency department, that's going to lower the overall cost of care and the reimbursement.
So I assume right now the primary source of revenue is CMS based, Medicare reimbursement.
Well, about 50% of our revenue comes from CMS. The other half is from private pay.
Okay. All right. Another question from the audience about the share price. You've done very, very well the last, I'd say, 9 months, but then you were down significantly last month, as was most of the names I cover. Do you have any context for what happened?
Brad, you want to jump in on this?
Sure.
I'll add color.
Yeah, absolutely. Yeah, we for us, the share price is always about controlling what we can control, which is primarily executing and delivering earnings. Jim talked about in the presentation the fact that we've had a focus on both growing revenue, but also expanding operating leverage. And it does feel a bit like our expanded operating leverage was growing so quickly over the past year, where when we've tried to set the expectation, double-digit top-line growth and marginally better operating income growth or bottom line growth, we had so much low-hanging fruit over the last year that there were times where our earnings were growing 60, 70, 100% in some of those quarters. And I think with that came the valuation side of the equation. We saw our PE get to the point where it's really higher than our historical valuation. I feel like right now we're right back in line with what we've seen historically. And again, that's part of the story. As we come back into the market, repurchasing shares, we do see the value there and are putting our money where our mouth was.
And are you happy with the size of the sales force right now? I know you've kind of shrunk some of the territories to add a few more. Do you think you're at a good spot with that, or do you think there's still room to add sales reps across the country?
No, our intent is to continue to add. We have to be really deliberate. Jim, I think you and I have talked about this before. And I think for the folks that are on the call right now, I think it's important to note we're a single product company. And so we want to be really deliberate. And our sales reps, a big part of their incentive compensation is predicated on getting referrals. And so anytime, having been a former salesperson myself, somebody shrinks your territory, especially mid-cycle, that adds to some angina. So we typically determine what the territory expansions are going to be on an annual basis, and then make determinations as to when we actually execute against that. So we're in a great spot right now, with the feet on the street that we have right now. But as the year progresses, we're not on the calendar year. Our year ends at the end of June. And so as we head into July, we'll certainly be adding new territories for our next fiscal year.
And how long does it typically take a new salesperson to get up to speed?
Well, the norm for us has been around 6 months, but one of the things that we've done, I think, better with the recruitment of the talent that we have, coupled with expectations, coupled with our training regimen, is that we've brought that cycle down from about 6 months down to around 3 months, where we're seeing productivity.
All right, well, we have just about a minute left. Do you want to make any closing comments before we sign off?
Well, first off, again, Jim, it's always good to see you, and thanks for the time today. Thanks for all of you who have joined this call. I think the last thing I would leave you with is I think it's important to reiterate that, as a company, we have a cascade of customers. We've got prescribing physicians, we have the patients that we serve, but also we have investors. And one of the things that Brad and I are very conscious of, as well as the rest of the management team, is we want to make sure that we're delivering great performance for you, so that, as Brad had mentioned, relative to our stock price, we get stock price appreciation, and that's what we're expecting to continue to do.
All right, great. Well, appreciate you presenting today. I know we kept you busy. with meetings. Appreciate you taking the time to do that too, and hope to hear from you again soon. Get another update.
Super. Thanks, Jim. Thanks, everyone.